You will dodge a lot of losses if you just don't take bad signal candles. Let's go deeper. Hey guys, it's October 12th, 2023. This will be the chart lesson for the day. Today I was looking at the pound Audi. I came into the market right as this push here was happening, moving up. So what I saw was that, and going even back here, we had this thing had been dropping for, it seemed like hours and hours, if not days. And so this drop here actually ended a market cycle. So I was looking for the signs of us reversing to start coming up to test these highs here. And I thought it was actually starting here. And so jumping right in, this candle was forming and I couldn't take it because it's an inside bar. It didn't break lower. It didn't close higher. It just doesn't qualify as a signal candle for me. And then, it just was a really small bar. It's an inside bar. So I skipped it. Unfortunately, it would have worked. Would have worked. Then, if you count from the bottom, if you look from the bottom, and we're always looking for two legs of correction. If you see, we got to push up, trend break, push up, new high. So this small little pattern is played out. So what you have to understand in the market is that there's big patterns at work, and then there's smaller patterns a lot of times inside those big patterns. It's kind of just like how on a higher time frame, a pair could be moving higher, but then if you drop down to a lower time frame, the current state of it is it's going lower. It's in like a little pullback state, but on a higher time frame, it's still an up day. So there's smaller patterns inside of bigger patterns. So you got a big pattern happening, but then these small moves of two are always happening because the market moves in two. So we got this push up, trend break, retest new high. This little baby pattern is over. So if you're counting from the bottom, this is a first entry, second entry short with a pretty decent signal candle. Didn't close on as low, but you got a lot of stem for rejection, and that's pretty much a falling hammer. That's money. 1, 2, 3. All right. And we come down. So now at this point, you're expecting prices probably to try to come test this low. Even though it's tried several times and couldn't, it's iffy. So it's like 50-50. It's a 50-50 chance it's going to come test. It's a 50-50 chance we're going to go higher. It's a tough call. So let me talk about the short first though. But if you notice, you get the high here, push down, push up, lower high right here. Signal candle ain't great, but it closes under the EMA. That's kind of a sign that we're probably going to go lower, at least test here and here. So you take that, that's a good trade. 1, 2, 3. Now, unfortunately, I was thinking that it had tried so many times to make this new low that it's probably not gonna make it. So I was steady looking for longs in this case. So I took this boy right here and got trapped. It's a tough call. But from the count also, first entry, push down. It was a second entry long with a humongous strong signal candle close on its top. It just didn't work out that time. Every second entry aren't made equally, and I knew that it was iffy when I took it because the EMA is straight across. But I was looking at this too, like, oh, maybe we're gonna get another push up. But this push up here is played out. This isn't a leg. This is two legs. So it's just played out. So it's a really tough call right here. It was a really tough call. The signal candle looked great, but really, if I was reading the overall dominant trend, which is down, the dominant trend is down here. So I should have linked towards what the dominant trend would do, and I could have won here. I could have won here in all reality, especially after I saw this one. I should have waited, known this was a trap to trap people going long in a downtrend, and I should have caught this down, but I didn't. So then moving on, we dropped down, then finally had this push up. Nope, that trapped some more people, but then we got sort of a matching bottom here. Pushed up, came back. Now we got our low, push up, higher low. Broke lower, trapped some people. I was ready to take this, then it did it out. I don't take bad signal candles. Too much stem. Look, warning shot, warning shot, warning shot. Don't go long. If you do, 1, 2, 3, you get trapped and you lose your shirt right there. So, man, warning shots are there for a reason. These stems mean something. That's rejection, rejection, rejection. Don't go long. Don't go long. And I didn't. Hey, and I saved the loss right there. So good call. But then what we get is we still can't go any lower. We still can't go any lower. And we basically get another low, push up, come back, higher low. You may not want to read it like that. Or you can read it from this new high here, first entry, push down, second entry long. You can read it. You can call it a lower high. You can call it a second entry long. Either way, if you catch this one, 1, 2, 3, you caught the home run. Best trade of this little segment. Then you push up, pull back, you get another higher low right here. Low, push up, higher low. Problem with this one, there's 2 problems. One, you're a long distance away from the EMA. But this was a huge, strong leg. So you could be just thinking, hey, I'm going to get another leg like this, or this may be the start of a trend, momentum trend. So you may get a rally. You may get a rally-based rally right here. You could be thinking rally-based rally. You could just be thinking strong trend. Typically, you want your higher lows to be a little closer. This is kind of too far away to actually call it a low, higher low, because it's too far away. You typically want them to happen closer. Like I would have loved for this to happen right here off the EMA, but it didn't. But the problem here again is just it's a bad signal candle. I was all ready to take it, then it did it out. So that's why I made this one blue. But if you took it, it would have won. 1, 2, 3. Then same thing here. I'm ready to take it because I'm like, okay, I couldn't go lower here. I'm counting this as a first entry, second entry short that didn't work. All right, I'm ready to go again. Too much stem. Warning shot, warning shot. We see what happened back here. I can't take those, even though sometimes they work. Down here, it didn't work. That's why I don't take bad signal candles. You need a good signal candle to trade like this. So these stems are warning shots used in most cases, like it was here. Here it wasn't, and that's just the way the cookie crumbles. Because if you take this one, 1, 2, 3, great run. All right, and then we move up. Here you got a first entry. This is actually, I meant to put one here. This is actually a first entry here. Push down. Look at this candle here, broke lower, close on its top, second entry. I actually took this. I forgot to mark it. I took this and lost. Per the count, first entry, second entry. It's legitimate, but it's very tight. We got 1, 2, 3 dojis in here. And so it was just too congested. It wasn't a clean second entry. The better one is right after you lose. You kind of get the push down, first entry, push down, second entry right here. Here you can kind of see more, even this is choppy, but you're trying to see two legs back, So again, the better entries are always off the EMA. This was close. I was calling this because it got so close and it got the rejection. Nice candle. Yeah, it just sometimes don't work out. But the reason if I gave this trade a reason why it didn't work because it was too tight, too much congestion here, But then if you wait, you get one right here. But again, you gotta skip this. It's rejection right there. It worked, but signal candles matter. So it was just a rough day. I didn't get the signal candles I needed, and this trade here, I'm gonna say this one lost because I was going against trend. Let's call this a counter trend second entry loss. And this one lost because I just entered in congestion. So it was just a tough day, to miss these 2 wins and then get caught here. That's rough. But that happens. That's why we do the work study lessons, so that, tomorrow I can, take something. Tomorrow if I see this, doji. No, you don't want to, I can't clearly see 2 legs back. I cannot clearly see 2 legs back here. And so, really, I was just trying to jump the gun because of this strong move up. I'm expecting another strong move up, but I didn't get it. It pulled back one more time first. That's why the best entries are always right off the EMA. But this was just too congested. So I understand why that didn't work. This one, I understand why it didn't work. Look, it was trending now. We were trending out. We had this push up had played out. So we should have expected 2 legs down. So in both cases, I can see why I lost. But what I really want to say is that this is why we do work study lessons. This is why you should take a screenshot of your trading day and mark every trade that you could have taken, like this one that would have been money, like this one that would have been money, like this one that would have been money. And then look at the trades that you took, like this one that lost, and like this one that lost. So you can analyze it. And then tomorrow, I guarantee you I won't take a setup that looks like this tomorrow. I'm going to make sure I need to see clear 2 legs back. I need to see a clear 1, 2 legs back. This is a beautiful first entry, second entry short. You can clearly see 1, 2 legs back. So that's the type of second entry you want to take. See the difference in this first entry, second entry short, and the difference in this. I think that's the first. I think that's 2 legs. You see what I'm saying? This is totally congested. Totally congested compared to this. This is what you want to trade in. All right. This is what you want to stay away from. So that's the work study lesson for today. Make those losing days, get some benefit out of those losing days. Get some benefit out of your losing days. Mark up your charts. Look at all the entries that you could have won, all the ones that you missed, all the ones that you took. And if you start to do this each and every day, you'll start to see your setups come in real time a lot easier. But thanks for staying in, tuning in. Again, I appreciate you guys. This is a great time to like, subscribe, and share. And as usual, for staying this long as a bonus, I have a trade example for you. So we're going to jump right into it right now. So I'm signing off. My name is JD. And as always, I wish you increase on the Sutton. Bye-bye. Oh, here we go. Yeah, so we see the second entry work, then kind of failed. And from the top here, we got a first entry, second entry long, expecting that we're coming to test here, here, and here, 3 minutes.
We would like to thank you for tuning in to another Increase episode with JD. If you want to learn how to price action trade, please visit www.jdhyder.com and you will find his brand new course, IOTS, Price Action Trading System. We thank you again, and as always, we wish you increase on the Sutton.